let's dive deeper into the action with our markets reporters. Equities, bonds, commodities, currencies. Abigail, what are you watching?
Well, Caroline, I love your technical term for trading today. Meh for the S&P 500. A very small move, but an all-time high, another record all-time high. Let's take a look at this chart we've been looking at for months. One that had been neutral for a long time because the S&P 500 had been stuck in a range. The RSI momentum indicator also stuck in a range. But it slowly but surely over the last couple of weeks in particular started to turn bullish. And the reason why we have a set of higher lows here, that tells you on each dip the buyers had more conviction, stepped up, supported the index, a rising 200-day moving average. This area of congestion is broken to the upside. It suggests that we'll see an equal and opposite move to the upside, perhaps toward 3,200, supporting that, Mike. Take a look at the RSI right below 70. Everybody gets cautious when it's around 70, but technicians actually don't mind that. They like to see it keep going higher and higher. It's when you have a series of lower highs within the RSI that it gets bearish. But right now, this chart suggests that we could have some more all-time highs, record closing highs for the S&P 500 ahead, Mike.
Well, thanks, Abigail. Well, obviously, the rotation from growth and momentum stocks into value stocks has been one of the main themes of the market over the past few months. But there's one opportunity for value hunters that hasn't gotten a lot of attention, and that's actually the S&P 500 itself. Now, the traditional market cap weighted version of the S&P 500 is trading at a pretty heady valuation of about 20.5 times earnings. But if you look at an equal weight version of the S&P 500, it's actually trading a lot cheaper at about 18.3 times earnings. That's actually the biggest discount for the equal weight S&P 500 since 2008. And that's based on trailing earnings, but it's a similar story for forward earnings too. And there is actually a way to passively buy the equal weighted S&P 500, including the $16 billion Invesco ETF with the ticker RSP. Now, investors haven't really been catching on to this value in this trade yet. Flows have been negative for 3 of the past 4 months. But Taylor, October was that first positive month of flows into that RSP ETF, so it may be catching on.
Well, Mike, I'm taking a look at the continued debate between share buybacks and companies that raise their dividends. And at least for now, it looks like companies that are doing share buybacks are winning the race. If you come and take a look at a chart that I'm showing inside my terminal, I'm taking a look at the Invesco Buyback ETF. It's an ETF that invests in companies that have increased their buybacks or raised buybacks of at least 5% of their shares outstanding. It is up more than 30% year to date, up more than 11% alone in the last month. And that's relative to the dividend ETF from Invesco. And that is an ETF that invests in companies that have raised their payouts annually for at least 10 years. And that is up only about 23% and really unchanged in the last month. So at least from this perspective, it does look like companies that are redoing their buybacks or repurchasing more of their buybacks are performing better than companies that are raising their dividends.